Well, so the topic of the day is Indian health insurance companies and their claim settlement issue. Indian health insurance companies and their claim settlement issue. So for patients, the healthcare journey from first symptoms and diagnosis to treatment and follow-up care has often felt like a match of disconnected steps. Having to coordinate between your primary care doctor, a specialist, imaging centers, hospital pharmacies, and insurance providers makes an already stressful situation even more complicated. However, a growing trend towards integrating health insurance companies and medical providers network is aiming to streamline this process. During recent years in India, the coordination between hospitals and health insurance is a pivotal aspect of the healthcare ecosystem. The country's healthcare infrastructure indicates or includes a wide range of hospitals from public sector units offering basic health services to private sector hospitals providing specialized care. So for most Indians, having health insurance is crucial as it helps manage the high costs of medical treatment in both public and private facilities. So health insurance in India serves as a financial buffer for families against the high cost of medical care. It is particularly vital in a country where healthcare expenses can often cause financial distress. Most health insurance policies cover a variety of expenses, including hospitalization, medication, and even pre and post hospital care, which can be quite comprehensive given the rising cost of medical services. So, how do you see the claim settlement ratio in health insurance companies? The effectiveness of health insurance policies is often gauged by the claim settlement ratio, that is CSR, a metric that reflects the reliability and performance of insurance companies. CSR is a metric that reflects the reliability and performance of insurance companies. It indicates the proportion of the claims the insurer has successfully paid out of the total claims received over a financial year. A higher claim settlement ratio indicates an insurer's robustness and reliability in settling claims, a sign of confidence for policyholders, especially during medical emergency when financial support is most needed. So, for potential policyholders, CSR is a vital statistic to consider when selecting an insurer. It not only represents the company's ability to handle claim efficiently, but also gives insights into its operational integrity. Insurers with a consistently high claim settlement ratio are preferred because they are perceived as more reliable and reassuring for individuals who depend on their health insurance for emergency medical expenses. So, incurred claim ratio of general and health insurers is a slightly different. An incurred claim ratio for general health insurance in India is typically high. If you want to know, I'll tell you. There is the comparative data of health claim ratio of 21 and 22 and the financial year 22 and 23. So the ECO General Insurance Company has the health claim ratio 103.75 in 21 and 22. But it has reduced now in 22-23 to 83.88. So this is a good sign. Good sign because the incurred claim ratio has not exceeded the 100. Similarly, IFCO Tokyo General Insurance, which was having 130.65 health claim ratio in 2021, they have also brought it down to 111.18%. But there are certain good companies also whose incurred claim ratio was only 69.56 in 21-22, that is Aditya Birla Health Insurance. They have further brought it down to 64.68 in 22-23. But the alarming situation has been controlled by the Cholamandalam. Cholamandalam registered a health claim ratio of 117.08 in 21-22. It has been controlled and brought down to 67.88 only to 22 and 23. Appreciable step. Certain companies are really working on this side, and they are bringing down their incurred claim ratios. So the claim settlement ratio is a critical metric for evaluating an insurance company's reliability and effectiveness, especially in the world of health insurance. This ratio measures the percentage of claims that an insurer has settled compared to the total number of claims received within a financial year and serves as a direct indicator of the company's commitment to its policyholders. So high claim settlement ratio affects not only the insurer's operational efficiency but also its financial health, suggesting that it has adequate resources to cover claims. For policyholders, this is reassuring as it reduces the risk of disputes or delays in receiving claim payments, which can be crucial during medical emergencies or financial disasters. So this is particularly important in markets like health insurance where the stakes are high and the timing of claim settlement can significantly affect the quality and accessibility of medical treatments. So evaluating CSR provides prospective policyholders with a clearer picture of what to expect from their insurer in terms of servicing reliability and can help them arrive at an informed conclusion that aligns with their needs for coverage and support. So facets to understand claim settlement ratio in health insurance are different. Here is the breakdown of the key aspects to keep in mind. How CSR is calculated? Claim settlement ratio is determined using a straightforward formula, that is claim settlement ratio is equal to total claims settled or paid upon total claims received plus outstanding claims at the beginning of the year. So this calculation helps you to assess which insurer have a strong track record of settling claim. For instance, companies like FCO Tokyo and Care Health Insurance have been noted for their high CSRs, which enhances their trustworthiness among consumers. The importance of consistency when analyzing an insurer's looking at their CSR over multiple years is beneficial. Consistently high performance in settling claim indicates an insurer's reliability and operational stability, making it a preferable choice for customers. There is volume of claims. Observing the number of claims an insurer receives annually can also provide insight into its scale and presence in the market. A higher volume of claims might indicate a more prominent, more established insurer, which could influence your decision when choosing a provider. Top reason why claims get rejected. Let's understand. Why the insurance companies reject the claim of health insurance? There are several common reasons why health insurance companies are rejecting the claims of the insurers. One, fraudulent claims are there. If a claim is found to be deceitful or misleading, it is likely to be turned down. This could happen if the policyholder misrepresented or intentionally misrepresented the information. Second, exclusions specified in the policy. Every health plan has specific exclusions, conditions, or treatments not covered under the policy. So claims that fall under these exclusions are typically rejected. No company will entertain that claim if that risk is excluded. The third one is expired policies. Submitting a claim against an expired policy will result in rejection since the insurance cover is no longer valid. So the company will not admit the liability policy has already expired. The next reason is non-covered treatment. The claim for such treatment will be denied if the treatment received is not included in the health plans list of the covered medical services. See, insurance companies have different health plans. Plans differs company to company, and in their coverage, certain risks are excluded, though those exclusions are specified in the policy. So if it is falling in the non-covered category, the insurance company will deny the claim. And again, there could be pre-existing conditions. The claim may be rejected if you seek treatment for a pre-existing condition before completing the waiting period defined in your policy. And normally, no company will cover the pre-existing disease. There is always a waiting period. It may be 4 years, 3 years, 2 years, whatever it is, as per the plan. This is the first exclusion of all the health insurance policies, that the pre-existing diseases will not be covered. So these are the prominent reasons on which a claim can be rejected. But otherwise, no health insurance company will prefer to reject the claim. On the contrary, they will prefer to settle the claim immediately because it is impacting on their claim settlement ratio. If the claim settlement ratio is good, the company has established a good reputation and their customers will rely upon the image of the company. So in India, coordination between hospitals and health insurance is a pivotal aspect of the healthcare ecosystem, because the country's healthcare infrastructure includes a wide range of hospitals, from public sector units offering basic health services to private sector hospitals providing specialized care. So for most Indians, having health insurance is crucial. Health insurance is crucial as it helps manage the high cost of medical treatment in both public and private facilities. And this is a financial buffet for families against the high cost of medical care. It is particularly vital in a country where healthcare expenses can often cause financial distresses. So the most health insurance policies cover a variety of expenses, including hospitalization, medication, and even pre- and post-hospital care, which can be quite comprehensive given the rising cost of medical services. But before taking the health insurance policy, do check the claim settlement ratio of that insurance company. Thank you very much.